Record. Welcome, everybody. It's a Thursday production call. This is for anybody who is a licensed and active agent. It'll be about an hour long training. We'll go over some topics here. Grab a pen and a notepad and be ready to take some notes. We will be going over kind of a lot here in the appointment, so don't get overwhelmed, right? Take some notes and apply a little, like 1 to 3 things to your business. Don't change everything that you do, right? And we're just here to give you tips, and we're speaking from experience on things that we struggle with personally, right? So this is us also learning with you guys and figuring out how to do this better. I got my co-hosts here, Nathan and James, so we'll be rocking and rolling and going over this with you guys. Our humble ask is that anything that we went over, if it helps you in your production, post it on Band. Let the community know. We are a community. We help each other grow and learn. So just let the community know on Band, and that way we can keep growing and learning together.
I like it. Let's go. I love it. This is more for us than it is for you guys. Just every appointment that I run after the production call is usually the best appointment of the week. Same thing with the live dial session. So let's go.
All right. So the topic for the day, it's 2 main things, right? So the first one is, are you diagnosing your client properly? And we'll go in more detail, but just like a brief overview of the 2 topics, right? So are you diagnosing them properly? Are you finding the product that makes the most sense for them in their situation? Or are you just going with whatever you have prepped for them? And then the second topic will be equity protection or critical period. They're the same thing, just 2 different names we use for them. So we'll go over how to implement that for clients that qualify for that and how to get more APP using that route. So we'll kind of get started with diagnosing your client properly. Good grief. So we'll kind of starting there, right? There's going to be a couple main things if y'all want to write these down, and we'll break these down even further. Implementing and utilizing the FIF. So that's the financial information form. Asking the emotional questions. And how to implement both of those to build value for your client's needs. So we'll start with breaking down the FIF, right? And Nate, you said you have the real script pulled up.
Did you want me to share that with you guys?
Yeah. So in the real script, right, we go through their health, we introduce what mortgage protection is, and then we get to the financial information form.
Yep.
Here's where we get to do a lot of like right, so we help clients emotionally and logistically. This is where we get to do like the numbers, like, hey, this is what it looks like for you guys, right? And every client's different. No 2 clients are the same as far as like their financial their financial situation, what they already have in place, their need, everything there, right? So Nate, do you want to kind of break down this part for us?
Yeah, and I think we were talking about this a little bit before, just prepping for the call, but I think it's important to remember that as you go through the real script, you're setting yourself up for success. All of the objections that you're getting at the end is usually a symptom of something that maybe you didn't emphasize quite enough in the beginning. So that's why this is such a cool, such a solid script, but there's so much psychology and preemptive work that you're doing here that's making sure that you can help that client in the best way possible by the time you get to the end of the appointment. So this is where the hard work is done. It's where it's in your role and purpose. It's in building the rapport, and then the the financial information form is really where you get to identify the situation. You get to say, as the doctor, cool, what are the symptoms? What are we experiencing? Where is their pain? And you get to also ask the client, if I push here, does this hurt? Right? Because they go, oh, I didn't even know I had a muscle that hurt. So this is where that happens. And then from there, we can go and look and see, okay, are there products that we have? And there usually are, but sometimes it doesn't make sense for the client to even do this in the first place. You may find that out as your diagnosis, but it gives you that information instead of you're just throwing mud at the wall. And then you would take that and help um, build value for them depending on your findings. So just starting at the top here. First thing is the equity, right? What is the situation with the house? Usually their single biggest asset. It's also often their single biggest liability, and it's not truly theirs until they can either pay the bank off or get out from under it by selling it. So making sure that you're getting them engaged, you have them write this number down and move on from there. The cash flow problem, let's see here, what are we looking at? List out. This section pretty much is making sure you're doing a thorough job of listing, hey, what are our expenses? What are our incomes? One important thing, and I'm not sure exactly where in this real script it talks about this, but asking what is already in place that can be used to protect that spouse. And think creatively. It's not just of the life insurance, it could be rental properties. There's the joke in the real script about the rich Uncle Bob, right? Bring that up again. It could be inheritance money coming through, right? It could be a classic car collection that's worth hundreds of thousands of dollars. Ask those questions. It's an opportunity to have fun, but you can also learn a lot about your client, and that way you're not, struck completely blindsided by, oh no, well, my, mom gave me her house and it's worth $1.5 million, so we'd probably just sell that if anything ever happened. Well, you didn't really get to ask those questions, did you? Um, Even if they do have a lot going on, they've got a lot of coverage in place, they've got a lot of properties, don't let that affect your mentality because it's people who have insurance are the people who understand why it's important, right? The people who have assets is because they understand how to work their finances correctly. So they often see that need in it. So whatever your answers are through here, don't get too emotionally caught up on, oh my gosh, this is a perfect appointment, or oh my gosh, these people are very, very dry, or they already have all this life insurance, or whatever the case may be. Do your job, ask those questions, but don't get too hung up on it. Anything you wanted to touch on there, Amber?
Yeah, I would just say, right, when you're going through this part, whether you're using the FIF in HQ or you're just writing it down, I suggest writing it down no matter what, right? So for every single appointment I run, I write everything down, right? So we do their health and then we break down their budget and what they already have in place. I
Did you
write
still
down
have a notebook? That looks like my notebook.
everything. That every single thing we talk about, if they tell me that their children won't keep the home, I write that down. Their children live across the country, I write that down. Because all of that's important information that helps you diagnose what their need will be. Right. I had a client in Alabama this last week. Their children one lives in Utah and the other in Washington State. Their children don't want to move back to Alabama.
Hey, Dominique, this is David from the Aloha program.
All right. Their children don't want to move back to Alabama. So it wasn't important to them to make sure their children can keep the home. They just needed their children to have time. Right. And we'll kind of go into what that means. But knowing, right, that's why we ask the questions in building rapport, in the FIF, in every part here, because it helps us diagnose what the client needs. So write everything down. Even if you don't think it's important, you can probably, hey, this is what you told me. This is what I'm seeing.
Yep. Two things there that really stand out to me is one, again, just making sure you're being as thorough as you possibly can because each section of the real script builds on itself to help you achieve success. And then success is helping the client, not necessarily getting the app. That's the first part. That's vital. And then the second part is you're having them engaged. This is something that I get lazy with all the time. I'll just kind of run through it. Cool, guys, looks what I'm finding. I've got all the numbers down and they haven't put pen to paper. It's not real for them. There's not that feeling of, oh, I do have $100,000 in equity. Oh, wow, I do have $3,000 left if something happens to my spouse and a $5,000 budget, right? So making sure that whether you're using the form in HQ and they can see it and they get that feeling, or you're having them write it down, make sure they're engaged, right? You're not just talking at them. That will help them build that emotion.
Yeah, there's a lot of psychology around the questions that are in the real script, right? Like when you're breaking down the equity, you ask them how much their home would sell for, and you have them do the math with you. Like, hey, it looks like you said your home would sell for 300,000 and your mortgage is only 120. Are we seeing the same number for equity? It looks like 180,000. Are you seeing that too? It helps keep them engaged because they're not just listening to you ramble off numbers and just
Yep.
talk. They're actually having a conversation with you and building that up.
Yep. It's that kid in math class saying, yep, yep, I understand. Yep, keep moving. They really have no idea how to work the equation. That's what you're doing. All right. So cruising along here. Um, Cash flow analysis. So this is where you really say, okay, cool, this is all of our information. What does that actually look like? Right? These are the expenses. This is the income. This is the passive income. This is the rent coming in from your mom. How does that actually work? And this is where you're actually going in and saying, okay, usually we're assuming that this is a couple, right? It could be a parent and a child. It could be somebody single talking about you're a single mom, single dad, just depending on the situation there. But assuming that it's a couple because that's the easiest and the most common, um, having those hard questions. What does it actually look like? So, Bob, if something happened to you, what does that picture look like for Mary? And then let them talk and shut up, right? Don't speak for them.
That's the
Give them
hardest
time.
part is asking that question and not answering it for them.
Yep. And it's good because if they stumble and say, "Well, I've never thought about that," or "I'm not really sure," you can still be quiet, and that uncomfortableness will build, and they'll start processing that. Then maybe you ask a follow-up question. Hey, I'm looking here, and it looks like half your income goes away, Bob, because your work's not going to keep paying you if you're not around to do your job. Um, what does that look like for Mary? Or what's plan B? Right? Those are the questions that are going to really do that work for you. And
And Nate, if you can scroll up just a little bit,
Mhm.
right there. So where, say we have a husband and a wife or two spouses, right? That last paragraph right above the cash flow analysis, that does a lot of impact in your appointment because you're helping them understand, hey, you know, Bob's income goes away if he passes away tomorrow. Or even, right, say they're both on Social Security. I'm not sure if y'all are familiar with this, but the way Social Security works is as long as they're like have the surviving spouse, right? Whoever makes the most in Social Security, that's the income that stays in the household. They lose the other. So say Nathan makes 5,000 a month in Social Security and Mary makes 2,000. Well, if Nathan passes away, Mary gets that 5,000, but her 2,000 would go away.
Exactly. It actually says it right here. Out of all the time that tells you how close you got to watch, I don't know how many times I've read the real script, but I've never caught that it actually touches on that right here. One thing that's important to note is that, especially as we're going to look at critical period here, or critical period protection in a second, that's not something that happens instantaneously. If you've got the wife and she's electing to keep the larger of the two, because they get to choose, obviously you're going to choose the larger of the two. Um, Things happen, right? It's still a government entity. I've helped a couple of ladies who have run up $30,000 on credit cards because that gets stuck and it doesn't get processed and they mix up social security numbers. So it's not an instantaneous process of boom, husband passes away. I've got all that income coming in now still. Sometimes it's that way, but not always. So there's still a gap there that you really have to watch out for. Something that I noticed. James, do you have any comments on any of that? You're really good with this
Yeah,
too.
this is probably the main part, like crucial here. This is where you're gonna identify if there's even a need for them as well when you go over it. So you gotta identify the problem, and this is where you're gonna identify the problem. So if you're not doing the FIF reset, if you're getting a lot of declines or chargebacks or think about it, or you're just selling on price and getting small, accidental small policies, you're probably leaving this part out or not digging enough where you're uncovering the need or going over their budget correctly because they're still like, you know what, I still need to go over my budget. Then you need to make sure you're asking that question. Hey, did we leave something out? What are you doing with the extra money? Do you have a 401k? Do you have something set up? You know, um, This is where you find out, hey, do you have a pension or your retirement? They're leaving out that as well. A lot of times, just like you all didn't know maybe about the Social Security, it goes with the higher whoever has a higher amount, that's the one they're keeping. So sometimes it's only, hey, you're only getting $300 more because they're already getting a Social Security. One person's getting 2,000, one's getting 1,500. So they're only going to get the higher amount. They're not going to inherit both of them. So all they're going to get is $500 more. So stuff to think about. And then a lot of times when people retire or pensions, they a lot of people want the money up for, or the larger amount or don't set it up to where if something did happen, their spouse or somebody will get a percentage of it. So a lot of times once they pass away, that money's gone. That retirement's gone. I would say more than 75% of people don't set that up for their spouse or anything because they want an extra maybe 500 to $1,000 more each, front versus they're going to lose out a lot more if something did happen to them, to their spouse.
Yep.
Uh,
Yeah,
Same
that's
thing
really
there
good
with Social
point.
Security too. It can happen where if there's previous marriages there, if they haven't been married for 10 years in certain states, that can mean that they don't get any Social Security. So,
exactly.
Hmm.
would you guys want to touch on quick, because right when the clients are responding and there's an obvious need there, it's a pretty simple to ask those questions. But how do you guys handle it when, there's not that obvious need, or when maybe it seems like, you're not getting those easy answers to where there's an obvious need for the coverage? How do you guys handle that?
It really, it just comes down to, right, making sure you dug through the entire FIF, right? And say they don't have the budget or they're already pretty well set up. Every client's going to be different, but if they don't have a budget, I let them know, right? Like I'm not afraid to let them know, hey, it looks like actually this, I think it was early last week or maybe the week before, but I had a client who was negative $700 difference between income and expenses every month.
Yep.
And I was honest with him. I was like, hey, right, like at the moment, you're not even able to really pay your monthly expenses. So this, I'm not comfortable showing you anything. But right, being a genuine like caring person, like, hey, who's helping you pay those monthly bills, right? Because he's a single guy, late 70s, daughter lives across the country, not married, right? Like ex-wife doesn't talk to him. Hey, who's helping you pay this bill? Like, forget like what happens to the house, right? Like he's still alive and might lose the house maybe tomorrow or next month. Right. So just being that caring person, like understanding their financial situation. So we know whether or not it's even like something we can help them with. Not right.
Yeah.
Like it says toward the beginning of the real script, not everybody has a need. And it's our job to figure it out. And if they don't have a need, to let them know, hey, doesn't seem like this is a good fit for you, and then be on our way. Right. And then I would say on the other side too, right? Say they have a lot of assets, whether it be like life insurance or retirement savings or whatever it might be, like money market accounts, investment properties, things like that. Say they're already pretty well set up. We get to let them know, hey, looks like, we could still look at some coverage for you. At this point, it would really just be like an asset or like a what am I going to say? What was the word?
I usually say
Luxury.
Term.
A
luxury. Yep.
luxury.
Not
Yeah.
less of a necessity. It's more of a luxury for you
Yeah,
guys.
and
Say.
just keep in mind, a lot of times we're scared to ask those questions when we're doing the FIF, like especially asking if they have something in place, insurance. I mean, that's my favorite question to ask. I mean, because if 90% of the people, if they have insurance, they believe in insurance. And remember, they set up the appointment already knowing that they have that coverage already in place before so they want a necessity. So it's our job just to find something in the need that actually fits their budget or something, and their emotion of whatever they're trying to solve there. So obviously this is the mortgage. So when they got that out, it was either to most likely either for income replacement. Make sure you are naming that puppy there for what they got it for. Oh, hey, no, I got this for insurance for final expense. Okay, so you got your final expense covered. Boom, you're good. You don't need insurance, right? Okay, so we just want the mortgage. A lot of times they just want they even tell you like I want the mortgage covered because I got the other policy for income.
Right.
remember
There's
that policy can do two things too. If they try to come back at you too, I'm like, hey, this policy could either be income replacement or you could pay off the mortgage. It can't do both. I mean, unless they have like $1 million policy and their mortgage is less. And then at that point, it's just, hey, do you want extra just so that $1 million doesn't go towards the mortgage? And there's still people that want more. So you'll be surprised. So don't be afraid to ask those questions. But I would say about 90% the people that have insurance don't have enough. So a lot of times we just need to close that gap and just get more. So they have, hey, their mortgage is 300,000. They have maybe 100, 150. If that, and then you just need to cover and see how close you can get covering that budget. So make sure you are asking those needs, and you could use that towards you, or you could use that against you. So it's a lot of times, hey, you know what? Since if it's out of their price range, hey, you know what? You do have that other 150. Your mortgage is 300,000. We just need the other 150, and we got
yeah,
the mortgage. So use that to your advantage also as well. So you get to use it or don't. So you get to
I love
use
that,
that
James.
tool. So make sure you're doing that and asking those questions well. So it's a great way to get something, especially if they're on a budget or something like to try to get it, something that's reasonable for them instead
Yep.
of trying to cover the full mortgage. Like, okay, so hey, you know what? Because the 300,000 coverage are like 50, 60, and it's going to be another $300, but it's out of their budget. You know what? But 150 will fit in the budget. So, hey, let's do a policy for 150 that
Make them
covers
feel
them.
good about it, whichever direction you're going. Hey, you guys already have this in place. That's awesome. And then use that for however you want to. I mean, it's in the real script already, right before the role and purpose. Hey, it's
I,
important. Most people already have life insurance. Goes through and describes that. I mean, read the words on the page. Like, there's a reason it's in there because these things do come up. James, you helped me with a client a couple of days ago. They had a $500,000 mortgage. They both already had 750,000 in coverage. And I asked him, "Hey, you guys already have this in place, right? First, what was your mindset when you pulled that out? But now, does it even make sense for us to go look at coverage because you guys already have that?" They didn't give me a super strong, "Hey, we're definitely going to get this answer." But they said, "Well, we kind of want to kind of look at it." And we went through every time that I checked with them, they wanted to keep going further in the appointment. So we actually booked a follow-up for them on Friday. So we'll see. That'll be tomorrow. But case in
I,
point.
I would think if they're worried about their beneficiaries like not paying the rest of the mortgage, you could be like, hey, we can slap on a decreasing term rider that'll only go towards that mortgage. Just be like another policy that you just slap on top. But
Cruising forward here for the quality questions. Um, Kind of pick and choose here for what makes sense, right? But these are all, how do you guys?
Yeah, this is drawing the motion out here. So this is
Exactly.
you need to make sure you're asking these questions in there to finding out the need and kind of pressing that button like, hey, how much do we actually care about our loved ones basically that we want to get them protected?
Right.
Uh, I mean, because
Exactly
a
that,
lot of
James.
times, like, yeah, I want to, a lot of times it's priceless, to what you want to, hey, I want to make sure my wife's taken care of. I don't want her to worry about more. I don't care. They'll pay the full mortgage. Or, hey, you know what? This fits my budget. I'm gonna do as much as I can fitting my budget a lot of times. So you
Yep.
need to make sure you press it like, okay, this income goes away. This is where you're uncovering it. You're asking, hey, look, we have 500 bucks. You take your income out. She can't, the bills are 3,000, your 2,000 go away. Hey, what are we going to do? What does that look like? You paint that visual picture for them and be like, well, and you let them answer. You got to make sure they answer these, so don't answer for them. So they
Mhm.
got to see it and understand, but like, well, she wouldn't be able to stay in the house, or let the the wife, make sure you're asking the wife, what would that look like for you? What would you do if he passes away? Will you stay in the house? Sometimes maybe you could give them a little nudge like, okay, would you stay in the house if they're not responding? Or are you going to move closer to family? Do we want to stay in the house? What are we going to do? Okay, perfect. We want to stay in the house. Okay, we want to stay in the house. How much do we have in the bank? How long can we stay in the bank? You still digging deeper. Okay, so we only got maybe about 3 months worth of it. So does it look like we could stay in the house? No. And we should definitely get something in place. And you could ask him those questions. Yeah, absolutely. That's why you're here. Boom. So you got another yes. So you got to make sure you ask that questions. One I like to ask is like, hey, kind of setting them up before. So just be like, okay, hey, let's say we don't put this in place. How long can you stay in the house? how many months of mortgage, can we pay the expenses? And you don't even just do the mortgage, you do all the expenses. So
Yep.
make sure you're doing all the expenses. Hey, we got 3,000 in expenses. Maybe you only got 10,000 in the bank, if that. A lot of people
Make
don't
them do
even
the
have
math.
that.
How many months is that? Yep.
Yeah, you got 3 months, a little over 3 months.
And kind of on top of that, right? Like, hey, okay, right? Say we didn't put this coverage in place. What would Bob, what would you have to do to maintain the current lifestyle that y'all live and not have to worry about paying the bills? And then be quiet, right? Like we're asking a hard question. And like James says, you don't want to answer that for them. Get their answer and then ask, the spouse, right? Bob, Mary, how does that make you feel? And then ask the same question of the other spouse, right? So Mary, same situation. If we didn't put this in place, what would you have to do to maintain the current lifestyle that y'all live?
Yeah.
And
Be
I would
quiet.
say when
That uncomfortableness draws out that emotion. And again, we're not here to manipulate people into buying policies, but you are going to get a pretty wide range of responses. You're going to get people that are very clammish and don't say much. And yeah, ask those questions a couple of times, dig, ask it in a different way. But again, remember the purpose is not for us to manipulate them. It's to help them work through what their situation actually is so they understand it as well as we do coming from the outside with a clear mind. And then from there, this is where it's important not to get too hung up emotionally on what they actually tell you, because it's just the nature of the beast. If you've sat with even just a handful of people, that the people that are real tight and are one word answers and really just seem dry, those people, they get some of the biggest policies I've ever written. On the other hand, the people who have the perfect answers, and Nathan, we've been looking for this for 10 years. Thank you so much for getting back to me. This is so important to us. You show them the rates. Oh, well, okay, we're going to think about it. Thank you so much for your time. So don't hang your whole sale and how you feel about the appointment on the responses that you're getting. Just make sure you're doing your job and digging and getting those answers. James, I didn't mean to cut you off there, bud.
No, you're good. And I'll say this is where you kind of have to slow down a little bit as well. So, throughout there, you're building rapport. You want to bring a little energy up, but don't stay monotone. Here's where you want to kind of watch your tone and just slow down a little bit, and just so they could hear your sincerity when you're asking, hey, what would it look like? And that's why a lot of times, if you're not doing Zoom again, it's a lot so they could see it in your face, your gestures that you actually mean, you're caring. They could see it in your face that you're like, you know what? What would it look like? They could see you thinking and just be like, what will we do versus, hey, so what are you gonna do if you pass away tomorrow? So make sure like you're asking it properly to watching your tone as well on that, to showing them that you actually care. So they're still human. Remember, we're talking to people. And then painting the picture. A lot of times nobody thinks about this, you know what I mean? But it's a hard subject, but nobody wants to think about, what are we gonna do? They don't have a plan set. So this is us setting up a plan. So we uncovered the need. So hey, you know what? They can't stay in the house. So then you need to paint the picture. Okay, so if you can't say what some options that people do as well that they can't really answer. If we really want to stay in the house, then we will get kind of go into the next topic on that part. But you would go into, if we're doing an equity protection, we're going to do as much as we can. Hey, we got some of the income rolling over that could take a couple months, so we just need to buy us some time for a little bit. We're going to stay in the house, refinance it. That could take some time too as well, lower that payment so we could afford the mortgage there.
Yep.
So we're predicting, hey, they're healthy. If something did happen or they pass away, maybe we only need half, because by then we'll have half the mortgage payout, and then you could refinance and get that bill even half, to something you can afford. You got to start painting those pictures for them and giving them ideas what to do as well. That way, when it happens, they have a plan set too. So make
Yep.
sure not just uncovering the need, then now we need to solve the problem and hey, give them a solution too.
Yeah. You're
This is where
the
it's super helpful to call your upline, because especially when you're not super experienced, or even when you are, there's an appointment I should have called James in the other day where I was like, that would have helped a lot just to have somebody come in. But by calling them, maybe they jump on the call. Maybe you're just asking them, hey, I have all this information. I don't know what to do with it. How do I help folks build value here and paint a picture? They're going to have a great idea. Yeah, they said this, they said this. Okay, so that means X, Y, Z. Show them this. And it's like, oh, okay, that's actually super simple. And you go in with a clear mind instead of getting all this info and not quite knowing what to do with it. So mentor's invaluable in this situation.
You're diagnosing them, right? So all of this is up to you diagnosing what product that would best suit them, right? So if y'all think about like a doctor, you go to the doctor, you're like, hey, my knee hurts, my back hurts, I have a headache. You list off all these like things. The doctor's like, okay, great. So based on this, whatever, right? Like whatever they're going to diagnose you with. But they'll give you, hey, this is what it sounds like you got going on. This is what I recommend for the solution. So we get to do that for them, right? Based on their situation. Every single client is unique. We get to figure out what makes sense. And if you're still new or wanting to try and figure it out, like Nathan said, call your upline in the appointment. So we can't really help you afterwards. We can't help you if we don't know what's going on, right? And I would say here it's really important to not get stuck on the options you probably already have prepped for them. This is why we go through the FIF. We diagnose exactly what they got going on, because maybe you had a full impartial prepped for them, but that's not what they need, because they told you that their children wouldn't keep the home, they would sell it. So we need to pivot to critical period or right, just whatever their situation is. Even if you have something already prepped, go into it just looking to figure out what makes sense for that client, and then call your upline, get help, be like, hey, we prepped for this, but they told me X, Y, Z. What do you think? And your upline will be like, okay, great. Sounds like we need to pivot to this, do this, this, this. And you can rock and roll from there.
Yep. If you're confused, there's a good chance the client's going to be too. So just give yourself that peace of mind and be able to relax and say, yep, here's the process, folks. This is what I see most families doing in your shoes. Boom, boom, boom. We're going to jump here over to once you've worked through the FIF, once you've asked those emotional questions, you understand what the situation is, just describing critical period equity protection. I love these clients, honestly. Some people do struggle with them. They can be older, they can be less healthy. Typically, what I find is that means that they have a great understanding and need for the coverage, and they understand that, well, yeah, it can seem like a lot of premium for not that much face value. These are the folks that realize how important that is. They're closer to death, they're further along in their life, and that extra $5,000, $10,000 of coverage is the difference between their spouse living comfortably for the rest of their life or having to move back in with the grandkids and have to deal with that, right? And then that's a good option. Sometimes it's even plan B is even worse. So if you struggle with this, make sure that you're reading this section of the critical period protection word for word. It does the best job of explaining it, building value, and helping them feel like you're saving them money, you're getting them protected, and you're getting the best options possible. So, I don't know, Amber, do we even just want to read this word for word just to go through it?
Yeah. I mean, right. And it's important to have this part memorized, because this is probably, let's say, 50 to 75% of the clients we help. And I, right, always preface it in the beginning. If I know that they're probably, right, they're over 65, they're probably not going to qualify for a full or partial. So I will not emphasize the beginning of the script where it says, right, some people will get a full payoff, some people will get half. I kind of blow through, like breeze through that part. And then I focus a lot on most people get just enough to help their family with the next step. So we're kind of planting that seed early, like, hey, this is what everybody around your age with similar health goes for, right? And I I know the script by heart, but I still have this up to make sure I read it word for word. Right. So with this, your kind of posture, your tone wants to come across like, hey, you're not alone, right? Like everybody that's 65 and older, most of my clients, they do this, right? So I'll kind of read it how I read through it, and then we can kind of go from there. So most of my clients that are around your age with similar health, they go for our option 3. And it's the most affordable. It's also the easiest to qualify for. So it's called equity protection or critical period. We call it that because it covers the most critical period of time after the loss of a spouse or a loved one, when the family would be at most risk of losing the home. Now, what I mean by that, right, is God forbid, Nathan, something were to happen to you tomorrow, right? The bank's not going to come to Mary and ask her for the full 210,000, right? They just want what?
Right. Usually they'll kind of stumble and think about it and they'll go, well, they just want their payment. Or maybe
Yeah.
you have to help them with that. Not everybody gets it right away, but
Yeah,
they just
exactly.
want their payment.
And then I go right into the rest of it there, right? People go into foreclosure not because the bank wants to pay off. They want their money. They're a corporation. It'd be great if they called up Mary and said, hey, we're sorry for your loss. We're going to waive your payments for the next 6 to 18 months, but they're not going to do that, right? Yeah, they probably honestly won't even know that someone's passed away because they just want their money. So what this program option would do for Mary is it would buy her time to grieve properly, time to make up a plan, figure out what next steps would be without having to worry about making the monthly mortgage payment out of her own pocket. And then from here, I use what we talked about earlier, right? Like if they say they would sell the home, I'll follow the rest of this script. If they say, oh, they would have their kids move in, whatever they told me earlier when I was asking those quality questions is what I insert here before we talk about the rest of the options. So I'm writing that down, right? Because my memory is crap. If I don't write it down, I'm not going to remember it. So I
Pointing
write
in
it
and say,
down.
you're like, which family was this again?
Yeah. I write it down and then I use what they said, be like, hey, right? Because it helps them relate more to what you're saying. And then even from there, right, before I ask them, hey, what do you think makes sense for a number of months? I explain to them if they're 70 and younger, and you have a health license, I explain to them, hey, we can do the equity protection. We can also do equity protection plus. They both had the same base, right? So they give us the monthly mortgage payments for however many months we choose.
Before you go into the options, how we do that,
Mhm.
I want to show them the slide, because it also shows it on the slide and how it explains. I like to, Nathan, if you want to stop sharing.
Fine.
Yeah, James has a really good visual.
So this one, I like to show them and it gives them a real understanding of how. So I use a slideshow. If y'all don't, it's pretty much keeps you in line there as well, all the different slides. So when we're going over options, this is where it says option 1, 2, and 3. So I explained to them, I'll touch on it. So even though I'm showing them equity protection here, I show them, hey, you know what? Look, option 2 is the full mortgage payout. Usually that's harder to qualify for just because if we go up at age, especially if they know. So I emphasize that enough. So they say it, we even try, and I even tell them like, hey, we try to look at, try to even cover 100,000 if they're 70 or, 65, whatever, especially with health conditions. We even try to get close to 100,000. We're probably looking at another mortgage payments. I mean, I don't want that for you. Does that fit your budget? Do we say that? No, I don't want that. Yeah, perfect. The other option that we may have as well is this when I show them the mortgage protection. This is partial or half the mortgage, and I give them the example. Uh, so this is, hey, let's say the mortgage was 200,000, we would do 100 policy that covers 100,000, that covers any kind of death, and then the other half with one of our accidental mortgage protection plans. So if something did happen to you right now, usually I use this when I'm trying to get both of them. So I kind of go to cover both. If something did happen right now, most likely be an accident. So both policies will pay out. But by the time, if something did happen down the line, by that time we're gonna have half the mortgage, if not more, paid off. So you still got a full mortgage payout. This, um, I'll touch on this as well but if I know I'm doing equity protection, I'll go into this. I like it because it shows them a whole visual and it actually explains a little bit more what it is here. So it goes equity protection, critical period. By this time, if you haven't asked how much equity they have in the house, especially if they just refinance or more, they just they told them how much they have, they got a line of credit, a HELOC loan or whatever. They only take maybe 50,000, 100,000 maybe, but it was maybe worth a lot more. So they still have some equity on there. So this kind of shows them a little diagram there. You could explain to, hey, look, you have 50,000. It's only going to go up. 300 is going to value more. So you got 100,000. So the equity is going to end up being 250,000 at the end. So you kind of paint that picture. And I like this one because it goes most likely more average where you're going to show something with equity protection is going to be anywhere from about roughly about 6 months to about 24 months of mortgage payments. And I like that so they can understand it because they could see a visual and read it. And then, especially if they're 65 and older, I like to read, this is more of my plans that family go with once they're 65 and older, just because it's easier, more affordable as well to get on that package. And I start saying some of the other stuff from the everything, and I kind of explain a little bit more where I go like, hey, if something happened to you tomorrow, you know, they don't want the full 200, what we owe, the 215,000. The banks just want next month's payment. So that's where this kicks in. We have a lot, it's not like they're coming around, hey, you know what, we're going to pay you. The banks are going to, like, the bank's going to pay you, you know what, you don't worry about your payments for the next 12 months. And like kind of joke around that, like, that'd be nice, right? Yeah, but that's not going to happen. So wouldn't this be nice? Hey, you don't have to worry for the next 12 months of the mortgage payments. That way you can properly grieve, kind of set you up for the next step in life. You know what I mean? Because we got to get our financials, any income that may be rolling over, whatever the case may be. This is kind of set them up there. So that, you don't have to worry for 6 months, 12 months. You're good. And then you should get, be able to get your life back and stable. Like that, how much time? And this is where you kind of pin a point where, like, well, how much time do you think you need?
Mhm.
6 months, 12 months. I want a little bit more year. I want to give her as much as possible. Let's go with 24. Can we go past the 24 months? Absolutely.
Yeah,
So
I
this
love
is
that,
where
right?
you find
And
out what their budget is and you kind of gauge where they're at. So I like to show this and it explains it and they get it. And I ask them too. So like, hey, does that make before I even show them it, before you move forward, make sure you get involved. Does that make sense or do I need to clarify anything? No, that makes sense. So I pass away, they're gonna get, this is, Mary will get 12 months of payments. They will go to the beneficiary and I let them know, hey, it'll be in a lump sum. So hey, you know what? You only use 6 months of payments, you're gonna sell the house. You got a 12 months, say the other 6 months you can use towards any other debt or any other payments or expenses that may come up. So
yeah,
it doesn't go to loss. Perfect.
Tamitha put in the chat, right? So I believe her question was, what's the most number of months if they decide to sell a house that you can write a policy? And the answer is really just based on their budget, right? Like if they only have $200 to play with, then we're gonna look at something a little bit smaller, right? Now we can always combine different policies because for the equity protection, you're looking at a whole life, right? So you can do, say we did Eagle Select, we maxed it out at the 40,000. We did a Living Promise maxed out at 50. We can do a Dignity Solutions maxed out at 50, right? Like if they're wanting 36 plus months and say their monthly mortgage payment is $4,000, right? Whatever that math adds up to be, we can combine policies for them. It's just based on what their budget is.
Yeah, those are gonna be rare. Most of the time, you're gonna just do one. If you're doing a miracle 40,000, whatever, you're gonna max one out maybe, but you're gonna show them something like that. But most likely, they're gonna go for the lower options. They're gonna
Mhm.
run out of budget. And you can best gauge that because guess what? You went over their budget, so you know what fits their budget.
Exactly.
Um,
Yeah.
and
I just
then they see something that really, hey, you know what we want to do. That's where you kind of get that partial and you start combining. So instead of doing equity protection, they only owe 100,000, but they want to get close to, hey, you know what? Let's do America's 40,000, and they have the budget, and let's do Mutual of Omaha's 50,000. Let's get them 90,000
yeah.
total. We'll get them coverage.
You can go below 6 months, right? Maybe they've got recent health concerns, they're
Absolutely,
elderly,
that's a
they're
good one.
starting to struggle. You go to AIG, right? 5, 6 months can be $200, $300.
Yeah, I've gone down to like 4 to 3 months,
Yep.
whatever
And it's
fits their
only like
budget.
3 months each. Yeah. Sometimes that's all that it takes. That's still 90 days. That's huge from being going, oh my gosh, my spouse just passed away. What do I do next? I've got $500 in the bank and a $4,000 a month budget.
Yeah, $7,000 makes a difference
Yeah.
to
Huge.
families there.
And
So
the biggest way that we can right, so we've all had them, right? The client that only really qualifies for equity protection, critical period. They're like, oh, I want the full payoff. Great. As long as they're 70 and younger and you have your health license, we can help them with that with the bundle, right? So we do the equity protection and then bundle that with an accidental through Mutual of Omaha. to give them more of like that full payoff if they pass of an accident or any complications of an accident.
I like how you call it equity protection plus, because it really gives that idea of, hey, this is the base coverage that you're going to want to get, yes or yes, because it's going to cover you for absolutely everything. And then if we want to, hey, we can still get you that full payoff. If it is something that's out of the blue, Mutual of Omaha goes up to 70 years old and $500,000. You can get a lot covered with that. I think once by the time you max it out, it's only about $100 for somebody who's in their late 60s and getting close to that $400,000 or $500,000 mark. So great value, absolute huge value builder for families.
Yeah, and when they think about it, right? Because the way I explain is, hey, we got the equity protection, right? So say we're looking at the 6 months. That makes the 6 months worth of monthly mortgage payments. And the equity protection plus does that same thing. Also bundles it, say their mortgage is $250,000. It also bundles that with the $300,000 accidental that pays off the mortgage when you pass away of an accident or any complications. And they're usually, it like triggers them to be like, oh, okay, like what's the difference, right? And difference is never usually much, maybe like 30, $40 between the two.
I love it. James, sometimes we get reverse mortgages. I I think you've got probably one of the best processes to build value in those situations, and also just, hey, what is a reverse mortgage? How does it work? Does it even make sense for Bill to have coverage? How do you usually handle those?
Yeah, so a reverse mortgage is, somebody they say, well, I don't have any payments. I'm like, well, right now you don't. But they're trust me, they're counting them. All right. So what a reverse mortgage is, you don't have any payments until because you have equity. So they're basically going to take it away from the equity, um, or whoever is going to get the house. So if it's transferring over to somebody, say you didn't pay your payment for 5 years and then they pass away. Guess what? Whoever the house is going to has either the option of paying those 5 months, or they're going to sell the house and it's going to go to the state. And guess what? They're not going to, it's going to go to auction. So they're going to get to the first buyer and they're going to lowball it. And that's where people lose a lot of equity on the house and stuff. Or maybe they don't get the full equity. Maybe they'll get, hey, it's worth 200,000, but somebody lowballed them in the auction. They took the offer. So they lost like 100,000 or more in equity. Plus, they're going to subtract the 30, 40,000 from the payments they didn't do. So guess what? All they're left with is maybe 20,000 or less. So people don't
Right?
think about all those pictures, so you got to paint that picture as well, letting them know. So however months they don't pay, somebody has to pay it. Does your whoever we're leaving to, they have 30, 40, $50,000? It's something that, what if you live another 10 years?
Right. So a reverse mortgage, just for clarity's sake, right? Normally, when you have a lender, right, they technically hold the house and you're paying them off, just once a month. You're trying to get that 200,000 down to zero. That way you own 100% of the home. But what sometimes people do, especially when they're elderly, running out of monthly income at kind of right in their third age of life, is lenders will say, hey, we will carry your loan with the understanding that when you die, we get to keep the house.
Yep.
The only way that the family is going to be able to get that house back, because typically that, right, the gamble there is that there's typically more equity in the home than what the cumulative number of monthly mortgage payments that lender carried. So like what James was saying, say you've got $1,000 a month mortgage, they're going to keep track of that every single month. So after 10 years, you've got 12,000 a year. There's $120,000 that they've covered for you by holding that. They want to go sell that and make that back. And the only way that the family can keep that house, and if there's more equity outside of that 120,000, they have to pay that back to the lender. They have to,
So
yeah, go
So a lot
ahead.
of times, yeah, so they're basically giving up the rights of the house. So they're giving it to the state, back to the mortgage company.
Yep.
So
Actually, can I say something, guys? Because I do reverse mortgages as well. It
Yeah,
doesn't go back, it doesn't go to the state. It's a loan covered by the FHA.
okay.
And so the,
Yeah.
the heirs can still refinance the loan and have the house.
Yeah,
They have
James
up to a,
James
they
didn't say
have
that like
up
the
to a,
state. He said the estate, like
oh,
yeah,
the
so
estate. It
they'll
goes
get
to
it.
the FHA.
Yeah,
So
so they'll get it back.
it
They'll get
doesn't
it back.
automatically go to auction. The family has up to a year to sell the house or to refinance the loan. The key thing with people that have a reverse mortgage is they need to be able to have their family cover their taxes and insurance. That's
Correct.
how they need to show that we're still wanting to keep the house, we're wanting to take it. And so, they have other bills as well, but it's final expenses. It comes to a time when the family's going to be like, what the heck do we do? And, they need to know their heirs are taken care of during that difficult time when there is a transition. They got to sell the house or they're going to refinance it. So, it's not automatic. It is something that it is a bit tricky,
Hey,
but
that's
I've helped a lot of
helpful.
those kind of
Yeah,
customers.
that just
Yeah,
brought
that's
up some
super
more
helpful.
things. They have the so not only do they have to worry about the payments on the house and everything as well. Hey, you got a funeral too.
Yeah.
They got the funeral costs on top of that, which if you I don't know if you actually do funerals are anywhere from about I mean even cremation is maybe up there already. It's going up higher, like anywhere from like six to like 10,000, 9,000. And then the actual funeral, if you want to, cost, it could be anywhere from about 15 to, so I heard somebody that had like a $30,000 one, depending on what you want. So funerals are not cheap as well. And then you're still going to be having the house and to get the equity. I mean, it's just adding up more. So a lot of people just be like, you know what? Just sell it, whatever the case. I don't care. Because they
Robin
have
made
no
a good point,
choice.
right? The point is that there's still expenses that the family has to cover in order to keep that house, whether it's payments, whether it's requalifying for a loan, whether it's keeping the right I think you said taxes that
Yeah, they got to pay all the taxes over because
Back in
unless they set it up
insurance.
has
properly.
to come out of pocket for the family.
Yeah.
So hopefully that's helpful. Anything we want to wrap up with before we open it up for questions here?
I would just say, right, make sure when you're diagnosing, again, just to recap there, just make sure you're going through everything and reading the script and fully understanding their financial situation and what that looks like after they pass, right? What their family's plan might be. And even if their answer is I don't know, great. Sounds like we need to put something in place to make that process easier for them. So just really digging in, understanding that, and then if you need to pivot from what you've already prepped, make sure you call your upline. And when it comes to critical period or equity protection, right? Are you showing them the best option for them? If the answer is yes, then great. Go into it with confidence and know that that's going to help the family make sure that they don't have to worry about anything for that time period after they pass.
Yeah, and I can show a screen of kind of like what I show them. Make sure you're not showing, hey, this is 15,000, 10,000. Make sure you're showing them, hey, this is the accidental program, whatever you want to use. Uh, but make sure like equity protection, critical period, payment protection plan, whatever you want to use. Don't put, hey, this is 10,000 there. This is 10,000, this is 20,000, this is how much it is.
I was talking to Kayla about this just 30 minutes ago, right? What we do is we help families with what the program does, not what it is.
Absolutely. And the best way I would show them, like you said, the accidental. So I'm like, hey, look, this is a no-brainer. This is how you write multiple apps. Hey, you passed away in an accident, we got the full mortgage. We're gonna get these. These are no-brainers. So these are automatic. So these, regardless of what, they're gonna be automatic. So I just tell them, so this is what we're gonna put in place. We pass away in an accident, we got the full mortgage for him. And then the next one is gonna be like, which one of these fit your budget? 9 months, 6 months, how much are we guaranteed? So, hey, you want 6 months, 9 months of payments, 12 months of payments for each of them? Where does it fit your budget? That one. And then that's when you combine them both.
And kind of adding on to what you said there, James, right? We don't put the face amount there for the equity protection because they can do the math, right? We 9 times whatever their mortgage payment is going to be the face amount,
Yeah.
right? Like they know what their mortgage payment is. Great. Okay, this will pay my payment for 9 months. And you might hear them doing the math, right? Like, okay, that means it's a $15,000 policy. Cool. It's not that we're hiding it from them, right? Like they can do them.
Yeah, make sure they know too afterwards. So even if they choose, like, I want the 18 months, okay? I tell them, hey, they're gonna pay it in a lump sum. So it's 15,000.
Mhm.
Which is a 12 months of mortgage payment for the 77. Does that make sense to you? Yes. Okay, perfect. So make
Yep.
sure they do that too.
Awesome. Let's open up for questions. Anything you guys
A few minutes.
missed?
Anybody have any
Curious?
questions?
Got 5 minutes here.
I absolutely have a question. I'm finding that it is increasingly difficult for me to think on my feet when I'm dealing with a healthy, young, non-smoker who has the extra money as far as what I can see. But again, we don't shop with our own wallets, right? But we go through the FIF. I see that at the end of the month, they have $1,700 just sitting there every month. We go through the presentation. They say, this sounds great. I just don't have it in the funds right now. How do I stay genuine without getting salesy at that point? You know what I'm saying? Like, you
So right back to
absolutely, you want it. You said you need it. What's the holdup? Like,
Yep.
how do you connect those
diagnosing it,
dots?
right? Don't be afraid to let them know, hey, okay, we went over your budget. Is there anything that we're missing? And relist their budget, what they said.
And they say, no, that's what I have left over. Again, I just this morning, $1,700 left over at the end of the month. They said, no, that's right.
Okay, you could ask him. I always ask him, like, what are you doing with that money? Put it in the bank? Are you investing it? Like, what are we doing exactly?
Okay.
Yeah.
Okay.
And then whatever they tell you, because a lot of times, hey, they still go out to eat, they still, just
Sure.
expenses,
Sure.
whatever. How much of that is actually going to savings? And that's really what your budget is. Okay, so maybe they spend 1,000 just blowing it off, going out, he's young, whatever. Maybe 500. So that's your budget, really, 500. That's what they really use. And then that's what you're gonna be. You know what? That's what I usually show them if they're young and everything. You could go to. I usually show them like for the mortgage to cover everything. I do a return of premium or an IUL. You could see, but mostly either one of those so they can see a value on it. And I like to do the 100% return of premium because it's like, hey, you know what? Instead
Yep.
of putting $500 there, hey, look, this policy's 100. Let's just redirect, put 400 in there, and put the other $100 into this policy. Let's put your money to work versus just sitting in the bank doing nothing.
Mhm.
Let's protect yourself. So if something did happen, you got the mortgage paid off. As you're paying off the mortgage, it's becoming a life insurance policy, and you're still saving the money. And then I show them the actual amounts. I always show the 100%. So I let them know how much they're getting back. Hey, nothing happens to you. Hey, you get all your money back, your savings. You're gonna get $50,000 back.
Mhm.
Yep.
And
That's
another,
James. That's a
Which,
huge
and
one.
I'm glad that you said that because I felt like I was kind of not reaching, but I definitely went that route. He says, "Can we do the math?" I said, "Absolutely. I love doing the math on that."
Show them the math. So
I
absolutely
showed,
show them how
I
to
pulled up
correlate.
the calculator and we did the math together. Say, "Hey, this is where you'd be investing in yourself." He's like, "Yes, I hate burning my money." Absolutely. So let's talk about this. And at the end, he was just like, "Yeah, no,
And then
in a little bit, I think I'll be ready for it, but I'm just not ready right now."
yeah, and
And
if
there's two
it's
things there I would say is
Vince,
just
yeah, if
one,
there's
there's not
people.
always a need. So
Okay.
they're just on to the next, basically.
No beneficiaries, no spouse, just a
Yeah.
young. He was 24, healthy,
Yep.
doing great.
only other
Yep.
thing I would say to add would be call your upline.
Okay.
And
Okay.
having that third person, just, hey, yep, this is the best option. And even if they say the same thing you said, right, it still helps.
Yeah,
Yep.
maybe they want to start something like, hey, maybe they don't want an insurance policy. Maybe there'll be a good FIF reset there. Maybe that's where somebody could help them out too. Hey, let's invest it, put it in IUL for your retirement or stock or something. You know what I mean? So that'll be a good chance for them since they have a whole bunch. They just don't know what to do with it. They just don't really see maybe the value for this. So maybe, but get your upline on that. And usually it's either going to be FIF or do like a return of premium or IUL or something. If you don't know how to do those IULs, do a FIF reset and let them take care of it. Just be like, you know
Mhm.
what? Maybe we have some other programs to help you. Let's set up a call here with one of our specialists. I think it'd be a great asset since you're taking care of that and just set it up and let them take care of it.
Mhm.
I would
Awesome.
FIF reset them for that. Just that if you don't want to do that and you're not comfortable yet, get them and then you'll listen to what they're saying, what they're asking for until you get comfortable with those.
Okay.
Awesome. Let's do
Thank you.
one more
Appreciate it.
question, I think.
Quickly to tag on that, answer Jessica's question in the chat. She said, you mean to call your upline and have them join the conversation? I would say, yes, call your upline and ask them what you think would be best, right? They might say, okay, great, put me on the phone with them or put me in so they can hear me, right? Just call your upline, let them know what's going on, and then let them point you in the direction of what step might be next, right? Like it might just mean that they just reassure you that, hey, yep, you did exactly what you need to do, or maybe they're like, hey, let me just quickly talk to them, reassure the client.
Love it.
Thank
Right.
you.
Yes, ma'am.
We're at the 10 o'clock mark. I think we can squeeze in one more super, super quick. And then we're going to get to work here. Any other questions?
I don't want to steal the stage if somebody else has a question, but
Go
I
for
think
it.
my biggest thing is, so I have some appointments scheduled Friday and it'll be the first time I've ran through an appointment. So this has all been extremely helpful and I'm really glad that I joined this training, but I also have this newfound sense of overwhelm because, so what would be your advice for a new agent and hitting all of these points? Definitely call my upline. But what advice would you say for somebody doing this the first time?
I would
Oh,
say
well,
don't practice on the client. So practice before you go onto your. So make sure if you're doing a Zoom, make sure you know how to do a screen share. Go on Zoom, send on that. If you're just gonna be over the phone, make sure you go over the real script, read it a couple of times, the real script there. That way, it's not the first time you're looking at it. You feel comfortable. Say it out loud a couple of times. So don't let your clients be the guinea pig. So practice.
And
yep.
let your upline know when your appointments are so they could be available.
Exactly. That way, they're there to help you.
Yep. And Jessica, you're not going to become an expert overnight. We're still learning things. I felt exactly how you felt. Oh my gosh, there's so much good information here. How do I make sure I put this all in one appointment? It's already all in one spot. Make sure you're working with your upline before, so you've got a good idea of what you're headed into, and then just read the real script. Outside of the real script, I mean, that's your 6 pages to 6 figures, 8 pages to 6 figures, however many pages it is.
8 pages.
Everything that you need is in there. So if nothing else, read your real script, work forward. Keep it super simple.
Awesome. Okay, thank you. I appreciate that. And this recording, will we be able to watch it again?
Yes, it'll be posted on Band either tonight or tomorrow morning whenever I remember to post it.
Okay, awesome. And yes, Danielle, I'll message you on
Awesome.
Band.
All right.
We are a couple minutes over here, guys. We're going to go jump into the workrooms and put this to practice. Thanks for
Let us
joining.
know what helped you in your business. Y'all have a great rest of your week. Let's go kick some butt.